In Consumer 10 News this morning, March is Credit Education Awareness Month. Total household debt increased by $93 billion to reach $18 trillion the end of 2024. And the Federal Reserve reported credit card balances increased by $45 billion, reaching $1.21 trillion at the end of December. Credit health and debt is something many Americans are struggling with as inflation and the cost of living continues to rise. Earlier this week, I spoke with Rob Burnett with Outlook Financial Center about best practices to maintain or improve your credit health. Hi, Rob. Thank you for joining me.
Happy to be here.
Okay, Rob, first and foremost, for those who may not know, what's considered good credit versus bad credit?
Most people look at good credit as what their credit score is. So a good score is probably 740 or higher. That's when you start getting to the better offers. But the idea behind good credit, they're going to look at how you arrived at that score as well. If you pay your bills on time, creditors really like that. If you've got a long credit history, they like that as well. One of the things I see people losing points on their credit score from is they've got too much debt on credit cards and things of that nature.
So if someone is suffering from low credit scores, what can they do to improve it?
Well, the first thing you want to do is go look at the credit bureaus and see if the credit bureau has everything reported correctly. If there are errors on a report, you might want to dispute them. I would encourage that. All the credit bureaus have that process available to them just to make sure what's being reported on you is in fact your report. Second thing is most people may or may not be aware is you can go to the three major credit bureaus once each year and get a complete credit report. It's not going to give you a credit score, but it's going to show you everything that's listed on there. It's going to show you your payment histories, what your credit balances are and have been. So it's going to provide you a lot of opportunity to look at, okay, what do I need to go look at and work on?
What else should people be doing to keep their credit in good standing? I have heard that having a little bit of debt is actually healthy and beneficial to your credit score.
That's correct. If you're only using some of your credit, let's say you've got $50,000 in available credit through various credit cards and things of that nature, if you're using less than 5,000 of that 50,000, that's under 10%, that's going to be scored very favorably. And if you want to be able to get, one of the things I encourage people to do too, if you've got a couple of credit cards, use them for specific purposes. I'm going to use this one for food. I'm going to use this one for travel or buying gasoline. That's a great way for a young person to also build initial credit, is have a focused purpose.
A lot of people don't like talking about money. It's a very sensitive subject. But why is it so important to have these open discussions about credit and overall financial literacy?
You need to understand how the system works, and not that you can game the system, but understand how it works. There's so many people in different businesses that started using credit scores. Insurance companies have started using them. Obviously, the credit card companies, but if you're trying to get a mortgage loan, they're going to be looking at your credit score. All of them are looking at what is your ability to repay. That's what they're looking at. And the longer your credit history showing this person's paid all of their bills on time, that plays very, very well, both in your score and in the eyes of the credit bureaus.
Okay, Rob, thank you so much for joining me here today. Here at 10 TV, we are always working to save you money. For more tips, head over to 10tv.com/consumer10.